All right, we are back live, ladies and gentlemen. Let's jump right into it. Okay, so today was FOMC day, and the Fed did not raise rates and he didn't lower rates. He did absolutely nothing, but hinted that he will be looking to raise rates two more times before the year is over with. And if you look at this Bitcoin chart, here's the Bitcoin futures. Something interesting has happened. So late in the day, the market sells off, and where the futures, I'm hitting the wrong thing. This is the wrong chart. Forgive me for a second. What was I? Okay, here we go. So it sold off late into the session. At one point, futures was down 1,000 points, and now the market is looking for a continuation pattern for tomorrow. You can see long-term trend bearish, intermediate term bullish, but we got a bearish trend momentum reading. Remember what I've always told you is all the uh, down moves in history, the biggest market crashes in history have all happened during a bearish trend momentum reading. And all the historical all-time rallies have happened under a bullish trend momentum reading. So market has now dropped outside of the Kumo cloud, falling through that 24,000 support. Now Bitcoin is officially in free fall. That's right, ladies and gentlemen. It is now officially in free fall status. So we're looking for it to find support between 19,000 and 20,000. And if that doesn't hold, we're going to 15,000. I know that's what the algo charts are telling us. Now looking at silver, it's bullish on all three measurements: long term, intermediate, and bullish trend momentum reading. And we have a positive bot check today. Market's still in this very wide Kumo cloud that goes almost up to about 26,000. So it's a very wide range, like a $3 range. And the market's looking like it wants to leave and vacate the lower end of the range and now test the higher end. So we have a buy now on that Bitcoin, got a positive buy check. So a big pop up, an upsurge in silver is coming forthwith. Looking at nat gas, it still has no gas, but you got a bullish trend momentum reading. So the market could make a push here, could make a nice pop up and run, and finally have itself a bear market rally. But it has a lot of resistance to get past here and here and here and here. Major resistance all the way back up to $7. So we'll see if it can get something going. Next up is the Dow futures. All right, so the Dow futures, as you know, still has a bearish trend momentum reading. And we had a bullish intermediate trend to go with the long-term bullish trend. And we have this bearish trend momentum reading. So the market sold off today, and we have a crash alert for tonight into tomorrow's trading. All right. And the support is going to be back down to the 33,500 level. And then 33,000 is the bottom of the Kumo cloud. So, yeah, I told you, as long as this red line remains, it's a sell the rally market. How many times has the market showed you this? It showed you this back here. It showed you again right here. It showed you again right here. It showed you again right here. And now it's showing you again right here. All right. Next up, we have the NASDAQ 100. It crossed over. The futures crossed over from a long-term bear to now a bull market, both long-term and intermediate term. And you have a new 52-week high that you hit today, and with a bullish trend momentum reading still. And it's looking like it's not wanting to pull back. It doesn't want to stop. At some point, it will have to. So we'll just keep watching it. Right now, it's in the long mode, but you keep hitting new 52-week highs, and at some point, the market will turn. and have a nice little correction. Looking at gold. Now, gold, you can see here it has a bearish trend momentum reading, and that's what's keeping the pressure on the price action. We have back-to-back crash alerts here, and we haven't gotten any downside production. So we know that the sell pressure is starting to mount, and you have a very wide Kumo cloud here, very wide trading range. So as long as this trend momentum reading stays bearish, that means the bias is to the downside for now in gold. Next up is the S&P 500, looking just like the NASDAQ 100. And you hit a new 52-week high. You hit the 44 handle. So it's going to keep running until it runs out of steam, and then the correction will be dramatic. Next up is the crude oil. Crude oil is neutralized, back-to-back rally alerts within the neutralized, and you're right at the resistance zone. So this market is still doesn't know what it wants to do. Next up is the Russell. The Russell has a crash alert and the beginning of a bearish trend momentum reading, folks. Looks like we have topped out now in the Russell. Next up, we got the US dollar index, and it's starting to slip back into the old trading range of 101 and 103. So, but you still got this bullish trend momentum reading, so any pullback will be bid, and you still got the bullish bot check here that hasn't been realized yet, so it will pop back up at some point. Next up is the Ethereum futures that sold off like the Bitcoin, and you can see the market is now officially in a free fall status, looking for a continuation pattern to the downside for tonight into tomorrow's trading. The next support is way down here at 1350. Wow. Like I said, as long as you got a bearish trend momentum reading, it's sell the rallies, folks. You sold the rally here, 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 and here's the market. Back here, you sold the rally here, market went all the way down here. Sold the rally here, market went all the way down here. Sold the rally here, went down to here. Sold it here, went all the way down to here. Sold it here, it went all the way down to here. It's wash, rinse, and repeat, ladies and gentlemen. Nothing has changed. And if technically in the chart, if technically nothing changes, then nothing changes. All you're doing is waiting for the next entry, the next signal, so you can get in there. And that's exactly what has transpired. The next signal came and went, and the market went along with it. So now we're going to see the battles of the bulls and the bears. And right now you got your marching orders. You know what to do, because a bullish trend momentum reading is looking for buying opportunities. A bearish trend momentum reading is looking for selling opportunities. You're either selling support or selling resistance, or buying support and buying resistance. It's just really that simple, ladies and gentlemen. All right, the rocket science part of it has already been figured out. All you have to do is place the trades. The system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And oh, I almost forgot. I had a request from the trading room. Hold on. I almost forgot. I just remember. Okay, let me go ahead and pull this up. Hold on. I'm glad I just remembered. Hold on here. Give me just a second. Okay. All right. We're going to look at a miner here. If I can get everything to come up. Okay. All right. Let me share my screen with you. This is our last one. Okay. So this is First Majestic. The ticker is AG. And you can see the long-term trend is bearish. Intermediate trend is also bearish. And the trend momentum reading is bearish. Market is on its way now to come down and test and or take out the 52-week low. That's the next step that's on this bear market agenda. This is a locked-in bear market, and it has not yet bottomed. So if you're looking for a entry to buy, you will need to wait until you get an official buy signal from the system, and then it'll tell you when it's time to start buying. But right now, prices are still falling, so you're either shorting or you're waiting for an opportunity to buy. The last opportunity that came to buy was back here on the week of March the 22nd of this year. And that lasted you until you got your sell signal up here on the week of April the 14th. And that was it. From there, it's just been all downhill. All right, so smash that like button, and I'll see you guys in the next one. Peace.